The S&P 500 has been up for 6 consecutive weeks, and December started out positive. Nasdaq moving toward an all-time high, and the Dow Jones Industrial also inching to an all-time high. Market participants are still showing no fear. Gold surged to a new high, then reversed. So is that it for gold? Welcome to another weekly S&P 500 and financial market analysis. S&P 500 started the month of December positive. And finally, the small cap Russell 2000 is leading all the indexes so far for the month of December. Year to date, the Nasdaq is still up 47%, and the S&P 500 up almost 20%. The Russell 2000 is still trailing on a year-to-date basis. Now, the S&P 500 is up for 6 consecutive weeks now, so would it go for 7? In the last 10 years, there's only one time that the market, the S&P 500, went up 7 consecutive weeks, and another time it went up for 8 consecutive weeks. So there is a chance that it could go up next week, although the probability indicator is low. And the Russell 2000 was the top performer last week with a gain of 0.98%, while the Dow Jones Transportation was the worst performer for the week, losing 1.63%. In the fear index, the VIX also showing the market participants are still very complacent, and the put-call ratio ended the week inside the head zone, closed at 0.76, showing the market participants are still being cautious. And the up-down volume ratio was only 2.2 to 1 in favor of the up volume, when the S&P 500 made a new 52-week high last Friday. And the daily advance and decline did not show a broad market participation, with only 429 more advancing stock than declining stock on Friday. And the number of stock make new 52-week high was less than when the S&P 500 was below the new 52-week high, and only 103 stock make new 52-week high when the S&P 500 made a new all-time high last Friday, and this does not indicate a strong market. And there's no divergence between the S&P 500 and the cumulative AD line, but the negative divergence continued on a level comparison basis. See, the AD line is still below the August peak, while the S&P 500 already taken out the July high. And the Nasdaq 100 did not make a new 52-week high last week, but it did close with a new 52-week closing high. The up-down volume ratio was only 1.15 to 1 in favor of the up volume. Not much of a buying pressure as the Nasdaq 100 closed at a new 52-week closing high. And the daily advance and decline also show a lackluster market participation. Only 477 more advancing stock than declining stock, with a new 52-week closing high for the Nasdaq 100. Same lackluster performance from the new high versus new low. Only 35 more new 52-week high than 52-week low, and the number of stock make new 52-week high was only 147, not a sign of strong market behind this new 52-week closing high. And the Nasdaq cumulative AD line showed negative divergence between the Nasdaq 100, sign of narrow market participation or pushing the index higher. Now let's take a look at the 11th sector in the S&P 500. We see the technology continue to outperform and the healthcare is underperform. Consumer discretionary on a short-term basis, we see a little bit of an outperformance, but on a longer term, it is still underperformed. Financial has been outperformed recently, but the longer term still neutral. And the communication has been outperformed. Industrial has been underperformed, but there is a sign of little outperformance in the recent days. And the consumer staple is underperformed, and so is the energy is underperformed. Real estate kind of underperformed with a bit of outperformance recently, and the material is underperformed, and utility is also underperformed. And looking at some other sector, we see the semiconductor is still outperforming the S&P 500. The energy continued to show weakness with the oil underperformed, and the oil exploration is also underperformed. The retail underperformance in the long term, but recently it has shown a little bit of uptick, and it is outperformed a little bit. Biotech is still underperformed, so is mining. And the banks and also the regional bank have been outperformed recently, but still kind of neutral on a longer term basis. And the home builder has been outperformed. Long-term bond has been underperformed. Now let's take a look at the yield curve for the 10 versus the 2-year. We're still seeing an inversion on that and continue to hover near this minus 0.5 level. The 10-year versus 3 months still inverted and continue to point to a recession. It is at minus 1.16. And the 10-year yield still below 4.33% and ended the week slightly up at 4.244. We'll see what this week FOMC announcement will do to the 10-year yield. I'm still looking for a 5.3 before it peaks. The dollar is still hovering around this 103 level, closed the week at 103.983. Continue to look for dollar to move back up toward this 105.88 level. And the dollar future is back near the composite point of control, looking for a move back up to this 105.80. Oil lost this 74.5 support level last week and got near this 67.29. We'll continue to watch to see if oil will be able to come down to test this 67 for support, or would it just bounce back up to this composite point of control. Still looking for oil to go back up to this 85 in the near term. We'll be surprised to see oil fail to hold this $67 support in the current geopolitical environment. Now, silver moved up above the 26 level last week and got a huge sell-off after that move. It is below the composite point of control again, and we'll see would it be able to bounce back above this 23.84 level here, this composite point of control. Basically still looking for silver to move back up to this 26 level and possibly break this 26.70. Gold sold off after making a new all-time high last week, and it is back inside of this consolidation range. And if it doesn't move back out of this consolidation range, then look for gold to pull back and possibly test this 1944 level. And if it doesn't hold this level, then look for it to come back down to this composite point of control near 1810. Otherwise, we'll be looking for gold to move back up toward this 2300 level. Now, let's take a look at the index, starting with the NASDAQ 100. We saw the FANG stock bounce back last week, and that helped push the NASDAQ 100 higher. We'll see if this bounce will continue or if this is just a one-week phenomenon. We'll keep an eye on a possible move toward the December 2021 high at 16,607. And the Russell 2000 was the top performer last week, and it continued to move toward this 1925 level. We'll look for a possible resistance there, but we're still watching for a possible retracement back toward the lower edge of this consolidation range near 1640 if it dips below the midpoint of this consolidation range. The Dow Jones Transportation was the weakest performer last week. We'll see would it be able to push back up to the 16,730 or would it pull back to this 13,460 area. And the Dow Jones Industrial is inching its way toward the all-time high, and it is less than 2% from it. The New York Composite Index lost a low ground last week, and this highlights how narrow last week's upward move from all the other major market indexes. Continue to watch to see would it be able to move above this 16,500 area when the Dow Jones Industrial makes a new all-time high. It made a new all-time high back in January 2022, a week after the Dow Jones Industrial made its all-time high. And the EMini SP500 shows some acceptance up above this 4,600 level. There's some poor structure down here at the 4,570 and below, and we're waiting for the single print to get filled, and also this poor low, and also this poor low to get repaired. So keep an eye on these poor lows and single prints. And from the volume profile, we need to see the ES push above the 4620 level if this breakout from this consolidation or this balance area is to hold. Otherwise, look for a price to move back into this balance area under 45.78 and a quarter. Now, before we take a look at the S&P 500, let's go and take a look at what's in store for the coming week in terms of economic report. On Tuesday, we have the CPI report before the market open, and on Wednesday, also before the market open, we have the PPI. Now, on Wednesday at 2 p.m., we get the latest FOMC rate hike announcement. Then at 2:30, we have Chairman Powell press conference. So be prepared for some volatile price action somewhere between 2 and 2:30 here, on Wednesday. Then on the Thursday, we have the weekly jobless claim. So now let's take a look at the S&P 500. The S&P 500 took out the July high, but still unable to come up to this January 2022 high at 4637.30. And if it wasn't for Friday's rally, the S&P 500 would have finished in the negative territory. And for the coming week, the upper range is between 4680 and 4663. And the lower range is between 4545 and 4527.50. So we're still looking for the S&P 500 to come up and tag this January 2022 high at 4637.30. Now, if we get some adverse reaction from any one of those scheduled economic news or event, we could see the S&P 500 break below the 4,500 and come in to this CPI gap here from last month's CPI report. Now, let's take a look at the index ETF, starting with the diamond. The diamond, we're looking forward to move toward the all-time high, and it did not do that last week. It just kind of chopped around inside within this, the previous Friday's range, and finished up pretty much in the middle of the weekly range here. And this week's ranges are 368.40 and 367.40 for the upper range, and 358.80 and 357.50 for the lower range. We're going to continue to monitor for the diamond to move up toward the all-time high. But again, if things are starting to go south, then look for a move down below this lower range and possibly come down to this 353.47. And continue to be on the lookout for a liquidation break back into this balance area. And for the SPY did not do much last week, make little progress toward the upside and close near the middle of the weekly range. The upper range for this week is between 467.80 and 466.90, and the lower range is between 453.40 and 451.70. We'll look for either the upper range to get tagged or the lower range and possibly the balance area to be in play. And the Q did not make much progress in either direction as well. It closed a little bit above the middle of the range and also closed near the 80% of this balance area extension. The upper range for the coming week is between 401.30 and 399, and the lower range is between 385.30 and 383.50. We'll continue to watch for the move up to this 1x extension of this balance area. But if the FANG stock starts to pull back or continues to pull back, look for the lower range and the CPI gap to be in play. Now, the IWM had a good week and it's continued to move toward the September high near this 191.86. Although it did not close at the upper range, it did close at the upper half of the weekly range. Now, for this week, the upper range is between 193.50 and 191.50, and the lower range is between 180 and 181.30. The market is pricing in a move to the September pivot high here on the upper range, and the lower range is near the midpoint of the balance area. So we'll be watching these ranges as potential target. Final note, the S&P 500 is trying to put in 7 consecutive up weeks for the second time in 10 years. Beware the market participants are getting too comfortable being complacent. The market will surprise us when we are least expected. And for the weekly SPY option, there seems to be more open interest on the put than on the call. Notice there's a huge put wall at 435, but the high open interest at 440 could be in play, and that is where the CPI gap fill is. So be prepared for some possible liquidation move. If you'd like to see additional content from me and to get my daily trade plan for the SPY and the ES, go visit my newsletter at Substack. The link is smtraderca.substack.com. Be sure to smash a thumbs up to help me promote this video and subscribe to help this channel grow. Thank you for watching and good luck.